Start of a new year. My next guest believes it comes with opportunities to invest in high-quality companies that have been lagging. Let's go to Chad Morganlander, Senior Portfolio Manager at Washington Crossing Advisors. Thanks for joining us today.
Thanks for having me.
You say Gambler Nation has been in control of the financial system. Can you explain what you mean?
Well, we have credit spreads that are so tight, and you have more of a speculative excess within the financial system. I know everyone is focused on the Mag 7 or the top 10 companies or 20 companies representing roughly 50% of the S&P. But really what you've seen is many companies that don't even have any profits nor revenues that outperformed quite a bit last year. You're seeing that on the speculative fringes regarding options, as well as you're also seeing it in many of in the world of cryptocurrencies. That doesn't mean that Bitcoin may not be viable, but overall you have more of a speculative fervor within the system.
Okay, so do you have greater concerns about the market?
I do. In fact, when you go and you look at 2025 and you look at the total return of the S&P 500, out of the 18% of the total return, 17 of it came from companies that had market betas above 1. So we would be somewhat more balanced within our investment stance. I would be moving up the quality spectrum, in particular on the fixed income side, because high yield bonds really aren't giving you that great of a opportunity here. And you just want to be able to pick and choose and be investing in more of those profitable, higher quality names that have more durability to them.
Okay, you also say, Chad, that people should question AI investments. And we know some of that started late last year, but what should they be asking about?
You have a gigantic amount of global capital investment that is being pushed towards an incredible technology. So Washington Crossing Advisors truly leans into artificial intelligence in a big way, but you're going to have a misallocation of capital. As technology evolves, it may be under question if you really need that many data centers. In fact, 40% of the data centers that are being created in the United States are being done by hyperscalers, the likes of Microsoft or Alphabet, that are well funded. But there is an additional 60% of projects out there. Compute. There is a substantial concern that there's not enough compute. That's why they're building these data centers. But the price of compute may fall precipitously. And the assets, when it comes to depreciation, that's one that may have to be questioned in the long run. So as a portfolio manager that's looking at businesses, we want to be mindful about what the viability of that business will be for 5, 7, and 10 years. And you just want to be very careful when diving into the artificial intelligence companies and their adjacent companies that are outperformed considerably over the last 2 years.
Okay, so let's get to some of the names that you like. Visa is the first one, and Visa was lagging in the second part of the year. So what do you like about Visa this year?
So the multiple has been compressing for the last 5 years. This is a growing company. It's going to grow with global consumption. Yes, consumption patterns have decelerated, and we believe that they will perhaps start to kind of hit their equilibrium and go higher a bit in 2026 here in the United States. And we do believe potentially that will happen globally. We don't believe that the moat, that they have a protective moat, and that we believe Visa and their competitor over the next 5 years will do quite well. So it's growing, profitable, very little debt, rising dividend story, multiple that we believe has contracted, so it's more justifiable to buy this company and put it as a core holding.
Okay, let's get to your next pick, which is, again, in the tech sphere, but not centered on some of the bigger moves everybody has been frantic over. IBM is what you like.
Okay, so this company is perhaps one that the investors are looking at this as one of the victims of AI. We believe that their actual lines of revenue are going to get a massive jolt higher over the next 5 years, whether it be from their consulting business or their Red Hat Linux side of their business, which software represents roughly 45% of their business. When it comes to AI and it comes to their mainframe business, there are smaller models that can run on their mainframes with power consumption at a fraction of the cost of what typical hyperscalers are doing, and as well, the data security there is quite robust. And then lastly, when it comes to AI, and this is kind of a lotto ticket, but the quantum computing side of their business, they're front and center, and you're getting it at a reasonable price, albeit it's not extremely cheap. But if you're going to be in this world of artificial intelligence and compute, this is the one I think is the most conservative way to play it.
Okay, I do want to get to your last pick here, which is Cisco Systems. Tell me about why you like Cisco.
Well, their bread and butter business, which is routers and switches, there's going to be a massive campus refresh over the next 3 to 5 years because of artificial intelligence, because you need to kind of run these businesses on the leading edge of technology. They do have a security side of the business that's more of a reoccurring revenue side. That security side is decelerated a little bit. We do believe that, of course, is going to increase and do quite well. And then lastly, when it comes to data centers, they do supply into the data center side, and in particular when it comes to the sovereign side. So you're getting this company at a pretty reasonable multiple, at an enterprise value to EBIT of roughly about 15 or 16 times 2026. I think it's just a very conservative, more attractive way of playing this whole data center build out. And it's also, we believe, even after this boom and potentially deceleration occurs, that this is one that can be quite, can take advantage of not only that, but other things within the AI complex.
Chad Morganlander, got to leave it there. Thanks for joining us on the program. Appreciate it.
Thank you.